So imagine moving to Fairbanks with a monthly mortgage payment of around $1,300 a month. Sounds far-fetched, right? Especially these days with interest rates being as high as they are. But what if I also told you you could do that for about $2,000 out of pocket? Sounds pretty far-fetched, right? Check this out. Okay, so there are a lot of people coming to Fairbanks that are hearing from just about every media outlet about how bad the market is. While we're not in a great spot, our market is not so hot right now. I want to urge you not to believe everything you hear on YouTube. The thing is, although, like I said, times are tough, nothing is impossible. So in order for you to buy a home for under $2,000 out of pocket and still keep your monthly payment at that $1,300 a month zone, we're going to need two things. The first thing that we're going to need is $1,000 in earnest money. Step one, have $1,000. So that's going to be it. You just need $1,000 for earnest money. And your earnest money is essentially going to be your skin in the game. Because you're going to be writing up a contract, you're going to need to put in your consideration in this contract. The seller is going to be putting their home as their consideration in this contract should they breach this contract. So you, as also being a participant in this contract, you're putting in your $1,000 as your consideration in this contract. So that's what you stand to lose should you breach this contract. So earnest money is your skin in the game. So that's the first thing that you need. Now, the second thing that you need is a VA loan pre-approval letter. And you can get that from a good local lender. So I recommend, and I've recommended her before, but Bethany Yoakum at First Rate Financial. She's fantastic. She's local. She's got that seller guarantee up to $5,000. So should the transaction fall apart for some reason that's out of the buyer's control, out of the seller's control, and it happens to be, the lender's fault, they're going to cover $5,000 worth of a guarantee to your seller. Here's $5,000 cash. The other great thing is their low fees. So because they don't charge a whole bunch of fees, that means that the buyer doesn't have to pay a whole bunch of fees. You don't have to pay a whole bunch of fees in terms of closing costs. So the offer that you're writing doesn't ask the seller to cover a whole bunch of closing costs for you because you don't have a whole bunch of closing costs. And the last awesome thing about working with Bethany as an awesome local lender here is that it's super easy to communicate with her team, and they are awesome at communication. You never have to wonder what's going on within your transaction because they are always communicating with you. So those are the two things that you need. You need a $1,000 in earnest money and a VA loan pre-approval. Now, that's it. It's just those two things. And I don't want to minimize what goes into those two things. Having $1,000 is no easy task, especially these days. And being pre-approved for a VA home loan is also not easy. You had to go through a lot of steps in order to get that. You have to be employed. You have to have VA loan eligibility. You have to have the credit score. You have to have the debt to income ratio necessary to qualify. You have to have a lot of things. So I don't want that to sound like, oh, you just have to have these things. It's quick and easy. It's not like 2 steps to being a billionaire. Step 1, have $1 billion. It is going to take some work to get those 2 things. But you just need those 2 things. And if you have those 2 things, congratulations, because that's really awesome. You've taken a lot of great steps in order to get there. So that's cool. That really is awesome, especially in these, with times being what they are, being in the financial situation to have all your ducks in a row like that is awesome. But if you're not there yet, this is what will happen when we get you there. What we're going to do is we're going to look at our Apex Realty Group cost estimate. And the first thing that we're going to do is we're going to put $300,000 up in the purchase price cell there. And we're going to assume that we're going to have about an 8% interest rate on a 30-year note. What most people are going to be looking at in terms of qualifying. I don't know what your interest rate will be. I'm just using this as an estimate because it's about the average that I'm seeing every once in a while here in Fairbanks. Yours may be a little bit different depending on what your financial situation looks like. And that's why I highly recommend talking with Bethany at First Rate Financial so she can nail down what your interest rate is going to look like. As far as taxes, I'm just going to guess around $4,000 a year. It could range depending on where your property is and depending on what the property ends up being assessed at for taxable, what the property tax assessment looks like. Homeowners insurance should be around $1,000 a year as well. This isn't something that you're going to have to necessarily pay out of pocket for unless you buy your home outright. Your property taxes and your insurance are all going to be paid out of an escrow fund that you end up funding when you purchase your home. So this isn't something that you're not necessarily going to need to be aware of but it costs about $1,000 a year and it will be factored into your monthly payment. So one of the benefits of using our VA loan is that we don't have to pay a down payment. You can pay a down payment. Well, depending on what your down payment is, it can have an effect on your VA loan funding fee. That's the next topic, is because we don't have to pay a down payment, we do have to pay a little bit of a funding fee to gain access to that no down payment. If you're using it the first time and you're paying no down payment, the first round of a funding fee is about 2.15%. If you're using it a second time, about 3.26%. We'll assume that we'll be using it a second time, about 3.3%. So this isn't something that you pay outright. You can pay it outright if you want to. That's kind of the purpose of the down payment. If you wanted to make a down payment, you could, but it does get added to the top of your loan, so you do end up financing it. That's kind of one of the things to keep in mind in the future, is that when you are buying with a VA loan, you're financing your funding fee. So on day one, the amount that you owe on your home is like 103% of what you bought it for. So pro tip, keep that in mind. Now, if looking at this sheet, if you want to get a home inspection, which you absolutely should, I highly recommend you get that. It'll cost around $650. Now, remember what I said, we're going to buy a home for less than $2,000. So that $1,000 of earnest money is there, plus $650. Now we're at $1,650. We've got a $350 buffer there. So that should be everything that we should need going forward. Now, in the middle of our estimate here, you'll see a breakdown of our closing costs that we see pretty much every single day with buyer clients and seller clients. And these splits are pretty typical of what we see in a given transaction, with the center column being the buyer column and the column on the far right being the seller column. And at the very bottom, under the buyer column, you'll notice a little table that it's got a heading that's called total expenses. And this shows what cash that you would need in order to close based on all of the given data that we've put into this spreadsheet. And right now, as you can see right here, it's showing that you would need about $3,600 to close on top of that $1,000 earnest money. But like I said, this whole video is about how to buy a home for under $2,000. So this is something that we can fix. What we're going to do is we're going to ask really, really nicely for the seller to pick up some of those costs. And now remember what I said before, by using a local lender like Bethany Yoakum, we get to minimize as many of those costs as possible. So had we worked with another lender that was charging some of these other fees, like the loan origination fee or document prep fees or some of those other things, we'd be looking at having these fees, like that $3,600 plus another 1 to almost 2% in other fees. So by working with Bethany and having almost no fees whatsoever, we've got a very, very low amount of closing costs that we're going to have to ask the seller to cover for us. So at this point, we have $3,600 that we're asking the seller to cover for us, and that's not too bad. So by making this slight change here, we've got it set up to now where you're getting your $1,000 worth of earnest money back at closing, but we can also use any of this extra surplus for any lender allowable expenses. And those, if you've seen any of our other videos talking about some of these things, can be like paying some of your debt down. If you've got extra credit card debt that needs to be covered and eliminated, those kind of things can eliminate your debt to income ratio, which can help knock down your interest rate a little bit. Those are some things that we can do. There's all kinds of options for that. There's also and you've probably heard Bethany talking about the like little 2-for-1 buy down thing too, where essentially we use a portion of the closing costs to knock down your interest rate for 2 years. So it knocks it down 2 points for the first year, 1 point for the second year, and then back in the third year, you're back to paying a normal interest rate that you had locked in from the very beginning. That's a huge way to save a whole lot of money, and it's available to you. It's just another thing that's going to help your monthly payment down. Now, we haven't talked about any of these properties I've been showing you at all. This has all been about doing everything that we can to reduce that monthly payment and help you get into a home for next to nothing. The really cool thing about both of these properties that I'm showing you is that they're both producing income. So you can also use that income to qualify. And the property at 236 Earnest Street has a downstairs unit that could likely pull in the same amount of money every month. So if we look at the monthly payment on our spreadsheet here for that $300,000 home at 8% interest, we're at about a $2,700 payment. Well, if we've got a unit that is being rented for $1,300, well, then that takes our monthly payment down to $1,300 a month. That's a heck of a lot more affordable than moving into a house for $2,700 a month. And then at the end of it, if we stay here for 3 years, stay here for 4 years, and then we sell, we'll have all that equity built up. We'll have saved so much money. I mean, you'd be hard pressed to, it's hard to find a rental for $1,300 right now, let alone move into a home you can count as an appreciable asset. This is kind of the building blocks of wealth building right here. Pretty good idea. I know what you're thinking, even with the tenant paying a lot of the monthly income, interest rates are still so high, it's still way too high to buy you. I won't be able to do it. Even with this. So I mentioned the two for one thing earlier. Let's eliminate that from the video because I'm going to introduce it now. So I know what you're thinking, even with this little bit of savings, that I don't know that I'd be able to do it. Interest rates are just still too high. And, I'm not going to be able to make that change. I know what you're thinking, Justin, even with a tenant paying, most of, if not half of the monthly payment, interest rates are just still too high. I can't buy in this kind of market. I won't be able to do it. It's impossible. Well, remember, it's my goal to bring you time and money saving solutions. And that's one of the whole reasons why I'm doing this. And if you take a look at this video where I sat down with Bethany Yoakum, one of the things that we ended up discussing was pretty much the whole video was dedicated to ways to help reduce your monthly payment. One of the ways to reduce your monthly payment was by dropping your interest rate by up to 2% for the first year that you're living there and 1% for the second year. So if you're going to be here for 3 or 4 years, that's a huge amount of savings. That could be up to $200 or $300 a month in savings for the first year, and another $150 to $200 a month for the second year. And then if interest rates drop by the third year, then you could be refinancing by that third year. So this is a heck of an opportunity. I highly recommend you take a look at this next video with Bethany. Tons of value there. Speaking of value, I hope you got some value out of this video. Our goal is to be sure that, all of the time and money savings tips and tricks that we know are given freely to you guys. They don't do a whole lot of good just being stuck in my noodle up there. If you'd like to see more videos like this one, make sure you subscribe to our channel. And if you'd like to see more videos like this, make sure you comment in the comment section below. One of the ways that I help to know that this topic is something that's important to you guys. If you want to see some more, time and money saving, or if you guys have any questions, you can give us a call, 907-885-0316, or you can reach out to us on our website, www.fbxhomesearch.com. Have a great day.